Hey everyone, and welcome back to Option Alpha in this video tutorial for the pennant chart patterns. So as always, we'll get right into it here. So this is the actual chart pattern. The pennant is it's an interesting pattern, sometimes called a flag or pennant, but they all basically work the same way. There's an initial thrust in the market or an initial move upward. Most of the time this is going to be a huge move higher, but again, this pattern can also work on the downside, so it can be a bearish pennant as well as a bullish pennant. But let's just take the bullish pennant for this video tutorial. So again, we're going to see a huge move up in the underlying market. This is going to be a very broad, long type of move. And it's going to form what's called the flagpole of this pennant. And it's really because it's a very strong, straightforward almost move. Not much choppiness, not much trading. It's just a pretty straightforward move. And it forms the flag where this pennant or where this flag is going to sit. And so what happens is that you get an area of small consolidation. Again, this can't be too long, but an area of small consolidation where the stock kind of takes a breather. Everything kind of calms down. It doesn't really collapse, but it does start to trend and move sideways and gets a little bit more squished inside of these trend lines here. Then afterwards, the stock will break out. And on this breakout here that I've highlighted on the chart, it's really important that actually some of these breakouts have heavy volume heading into that breakout. Those breakouts are much more defined, they're easier to see, and they're actually more reliable, as we'll see later in this video. And then after the breakout, then typically what will happen with this chart pattern is actually the stock will move the same distance as the initial flagpole. So again, here's the initial flagpole right here. This distance where my cursor is from the bottom to the beginning of the resistance level of the pennant. And so once it breaks out, it should move almost exactly that same distance. So that's your target point as far as your chart pattern is concerned. Crunching the numbers here, as we always do with these video tutorials, it's pretty interesting to see when you go back and average out a long period of time and looking at a lot of these patterns, that the pennant pattern has an average rise or decline of about 15%, which is actually a pretty good pattern. Now again, you understand that this pattern is a very short-term pattern. It can only last for a couple weeks, but it's really strong. The initial flagpole is really defined. It's a big move higher, and then the market consolidates briefly. Then it has another huge move higher. So has really good average rise on the pennant patterns, about 15% on the upside and obviously 15% on the downside for bearish pennant patterns. The breakout failure rate is also really good too. It just has about a 2% breakout failure rate. So what that's talking about again is the failure that the pennant will have if it actually breaks out higher. So let's go back real quick. The failure that the pennant will have if it actually does have a breakout and then moves back underneath the pattern and resumes the downtrend. So on average, this happens about 2% of the time. So you can be pretty certain that with these patterns, if you see a very good defined pennant pattern, that your breakout will actually lead to some significant gains. If not, it won't at least fall off the map. Going back to the numbers here, you can see that we have a throwback or pullback rate of about 47%. So basically what this is saying is that after the initial breakout, you will see the market kind of pull back or have a throwback. The stock will come back to that breakout area and just retest that area one last time. So that's actually a very high pullback and throwback rate, 47%. So about half of the time you're actually going to see a breakout and the market's going to pull back. As a trader and as an option trader, this is actually a good thing because you know that you have a real low failure rate, a good average rise or decline, and with the throwback and pullback rate at 47%, you know that when you see that initial breakout, you actually have some time to wait and get better pricing. You don't feel like you have to rush into the security to catch it on the breakout. You can let it move up just a little bit and it should come back down and retest that area of support or resistance. So some keys to remember with the pennant flag type patterns. First, they usually require evidence of a sharp advance or decline on heavy volume. That's very, very key to achieving these types of ratios here. So that's got to be a very sharp, straightforward almost move in the flag, the initial stage of the pattern. Anything less and it's really going to be a messy pattern. Most of the patterns are short term, but they can last up to 1 to 12 weeks. So again, these things can work on mostly any time frame. Usually it's a good time frame in between the 6 to 8 week time period because you have a long sustained move in the flag, some consolidation, which may take a week or two, and then again a long sustained move at the top half of the pattern. Again, the flagpole is the distance from the first resistance or support break at the high or low of the pennant. And that's the real key here. The longer the flag, the more important and powerful the pattern is going to be. Hey, thanks for watching this video from Option Alpha. As always, we invite you guys to come back and check us out at optionalpha.com. And if you like this video, please share the video with any of your friends, family, or colleagues on your favorite social network.